Welcome back to the Fox Robbins Show. Come on in, sit a while. This won't hurt.
Maybe.
It will. This will not be painful. This will be pure pleasure.
I hope.
This is the Fox Robbins Business Show. This is everything and everything, anything that you ever wanted to know about entrepreneurship and small business.
Business, you bet.
Everything.
Everything,
And
all inclusive.
We've been working at this for quite a while.
I'm not going to say how long.
We're not going to say how much time we've spent so far.
I'm having a 39th birthday next month again.
This show, that's what we're cheerleaders. We're advisors about entrepreneurship and small business, and I'm the co-host of Bill Fox. But the guy that you got to pay attention to, you got to get this. This guy he's graceful.
I am?
That's what they say.
I'm a klutz.
That's the word on the street.
Oh, all right.
Graceful and notorious,
I am
but notorious.
I am notorious.
And you and Roger Stone. Notorious and remarkable. It's Coach Robbins.
Well, thank you. I like two of those
Coach,
words anyway.
Coach, we're gonna do a couple of episodes here to cover our subject matter, which is understanding financial statements, and both at a business level and a personal level.
Absolutely.
Or the interplay, because we're talking about entrepreneurship and people who are either thinking about starting a business or they take the first step and they're in the act of forming a business, or they have a business that's already up and running, and maybe it's going good, but maybe it ain't going so good.
Right.
But understanding financial statements, the meat, the heart, the heart muscle of the business.
The language of business is numbers.
The credit for the ideas go to you and to an organization known as Seed Corporation.
Right.
And you want to explain that, please?
Yeah. What SEED stands for Southeastern Economic Development, and for longer than I'm going to admit on the air, I think 17 years, I have been doing their seminars for them. They do one-day seminars, and they're free. People are given a free breakfast. It's usually sponsored by a bank and held at a bank in southeastern Massachusetts. And in the morning, we talk about marketing and the basics of entrepreneurship, and then you get a free lunch. And the afternoon is what this session that they wrote and I deliver, or one of my cohorts deliver. It's talking about how your personal finances and your business, your new small business that you're hoping to start, are very closely interrelated, and why and wherefore. But we've done a great job in putting together. It's really a 2.5 hour format if we ran the whole thing, which of course we haven't got time to run 2 half-hour shows, but it's just a very well done treatise. And so kudos to the folks at Southeastern Economic Development. They are what's known as a community development organization. It's quasi-public, definitely non-profit, public-private entity. And one of the things...
where does the money come from?
The money comes from local lenders. They put the deal together. Some of the money, depending upon the type of deal it is, they've got funds to lend. They put it together with local banks that they work with, but they're willing to do the work to put the deal together. And one of the things, Seed is in southeastern Massachusetts. They're in Taunton. On Cape Cod, you have Coastal Community Capital, which is also a community development, CDC, CDI, Community Development Corporation, whatever. And they're all over the country. Their CDCs are all over the country.
We want to emphasize that to you guys, because the coach wants you to know okay, we're talking about this particular
Yeah.
organization, but they are all over the country. I mean, if you're in Wyoming, Oregon,
Doesn't matter.
Montana, Texas, it doesn't matter.
Not Seed. Seed is not in
not
Wyoming,
Seed,
but there are CDCs in Wyoming, Texas, Oklahoma, exactly.
Similar
Yes.
to Seed, and the purpose of Seed to
Yeah.
favor, small business.
To favor small business, and one of the little taglines I saw them use once, and I think they should use it all the time, we may say yes if your bank says no. That's the basic premise or the basic mission of a community development organization, that a lender, a bank, commercial bank may not be interested in the deal. It's a startup, it's a restaurant. Some banks don't want to do restaurants. Seed doesn't.
Now, is this startup only, or if you're already up
No.
and running, if you're up and running,
Yes.
they can
They can
still
work with
talk
you
to
too. Absolutely. You want a 504 loan. They're big on doing capital loans like for buildings and equipment. They put the deal together with the bank and the SBA. They do all the work.
So you guys need to know that this type of facility is out there and available, and you should be looking into it.
Look into your local CDC. Right.
Okay.
There's one up in Woburn, not Bay Coast, I got it wrong, but Brad Nichols, I know Brad, I always forget the name of his organization, but they're another CDC up in Waltham or Weymouth, Mass.
Right.
Yeah.
Okay, now we're going to jump into the subject.
Bay Colony, thanks. I got you, Brad.
We're going to jump into the what this episode and the following one
Yep.
are all about: understanding, financial statements.
Right.
There's an agenda,
Yep.
which is what financial statements can do.
Yep.
Determining personal cash flow.
Yep.
Personal financial
This is where
statements.
you are tied to your business, which you probably will be.
Personal financial statements,
Yep.
as well as business financial statements and pricing.
Yep.
And whatever. These are all, watching your own finances
Right.
is similar
And-
to watching finances
And
in a
how
business.
your personal finances are attached to how this little company you're about to start goes.
Yeah.
Right.
Anyone watching this show, you say, well, my personal finances are over here and the business is over here. They're similar.
Well, they should be kept separate. There's no question about that. But they're tied together. They're tied together by some field, because you may need to make a certain amount of money even your first year while you're in business. And that's what this talks about: is, are you in a financial position to step away from that job that's paying you 80 grand a year
Yeah.
and go ahead and take the risk and go ahead and build this business? That's what we'll get to.
Okay, so the agenda, again, what financial statements can do, determining personal cash flow, personal financial statement pricing, and also on the agenda is deeply serious business issues like variable and fixed cost.
Right.
Variable and fixed cost, break even
Yep.
analysis, business cash flow, one of your favorites of all time.
My favorite.
The financial statements, of course, balance sheet and income statement. The twin pillars
Yeah.
of your financial system.
Right.
BS, balanced,
Yeah. It ain't
balance
BS,
sheet,
all right.
and income statement.
Right.
There are other financial statements like sources and uses of cash.
Right.
And
That's a critically important too.
there are other statements, but
I believe that those three are
the foundation
Right.
pillars.
Those three.
Okay, so let's step into financial statements. And here your presentation says financial statements can, C-A-N, what they can do. So tell us, they can value the business.
Let's take this one at a time.
Yeah,
A business is worth what the financial statement says it's worth, in my opinion, and in most people's opinion. It's all about what kind of money is this business making. That's what it's worth, and what kind of money is it going to make in the future. You may have a business that you think is worth $1 million, but based on what those financial statements say, it probably is not worth that. It is worth what the financial statements, and there are many different ways of massaging the numbers and looking at them. One of my favorites for the small business is sellers' discretionary earnings, and too deep to go into this show.
No.
But the bottom line to this is your business is worth what those financial statements say it's worth, not what you think it's worth.
okay. And those statements will show income and expenses,
Yep.
profits and loss, sales,
Yep.
sales and sales history, inventory. There's also inventory, staffing.
Yep.
Financial statements don't show staffing, but they do reflect the expense
There
of
is,
staffing.
they not only reflect the expense of current staff, but they also reflect that maybe financially I'm in a position to go ahead and hire another person and take the next step in the evolutionary growth of this business. That's what your financial statements are going to be able to say to you. Say, you know what? According to, I was always a member of the National Association of Electrical Distributors, and it said to me that if your salaries were at 19% of your sales, you were on a national average for a wholesaler that size, $20 million. And if you're below that, you're either doing very well or you're understaffed. And maybe if you are in a position looking at that saying, gee, you know what, I'm only at 16% of my sales for staff, and I know we're stressed and I have an opportunity to grow, then I'm in a position to maybe hire a person or two. Your financial statements will tell you that. You look at them and you say, oh yeah, I think I'm in a position to go ahead and grow this company.
And it's all, those financial statements are saying, can you borrow money?
Well, that's it. I mean, again, not only is your financial statements say what your business is worth, it also says to you, this is a good financial statement showing a lender that I'm making a profit and I have good enough cash flow to go ahead and borrow this money to add inventory, to open a new location, to do something to grow the business, right? No, when your financial statements are showing you're losing money and you say, well, I got to go borrow money, well, a lender's not going to loan you money because you're losing money. Because the lender's looking at saying, well, how are you going to pay me back if you're already losing money and I give you more debt?
But you can make it up in volume.
You make it up in volume. Well, that's only for that tailor, right? Yeah, that's the whole joke. I make it up. I lose money on every suit, but I make it up in volume. Well, ha ha ha, it doesn't work that way, right? Yeah.
Okay, so financial statements, they can value your business.
Yep.
They show income, expenses, profits and loss,
Yep.
sales history, inventory,
Yep.
and staffing. I say staffing, I mean, a financial statement does not have a list of staff.
No.
But it shows what you
It
were
shows
spending.
the numbers, right. It
The
shows the
numbers.
numbers. It gives you
Okay.
numbers to compare to.
Okay.
And I mean, the bottom line to your financial statements is your or anything else is your business is worth what somebody's willing to pay you for.
Yeah.
There could be somebody out there that'll give you $1 million for a business making 50 grand a year. I don't know. It could be somebody out there, but there's not many of those out there.
Not
You know,
likely.
it's worth what somebody's willing to pay for it. And somebody, even minorly sophisticated, is going to look at it and say, let me see the financial statements. Let me see the tax returns. Let me see what this business is earning. Because if I borrow $1 million and buy your business, I expect the business to make enough money to pay that $1 million back, plus pay me a salary, right? And if it isn't doing that, it's not worth $1 million to me.
And your personal cash flow
Yep.
is important in understanding the financials.
Yeah, well, what you need to understand, if you're going to start a business, a lot of people, have to look at it from the standpoint, are you going to need to take a salary out of this first year business? And is it going to make enough money for you to take enough money out to live? What I call my silly expression is, are you going to make enough money to keep the wolves away? And that's what your projections will be able to tell you. I mean, I tell people all the time, if you're married to Bill Gates, don't worry about it, you know? Doesn't matter what the business makes. Bill can handle it, right? But otherwise, you really should take a look at, well, what did I make last year? Well, I made a gross 80 grand and I cleared 58,000, but I only spent 35,000 to live because I live frugally. I'm not talking about me, I'm talking about fictitious person.
Yeah.
Therefore, I know I need 35,000 out of this business next year to survive. So is this business going to give me that 35,000 I need? This is why a lot of people start a business part-time. Because they say, okay, I got to pay my rent, I got to pay my mortgage, I got to buy gas, I got to eat, I got to do certain things to live. And is this business going to be able to generate enough so that I can take out of it what I need to take out of it and live my life? It's a very important issue. I mean, like I say, if you're married to Bill Gates, don't worry about it.
Although, Coach, you got to admit, starting a business part-time Fine, people do it.
all the time.
But don't think that it's not a dangerous proposition.
It's tough. It's a hard proposition. I don't know if it's dangerous, but it's hard because of the work that you're going to have to put in. It's really, really difficult to do. But if you're that passionate about eventually stepping into a full-time, doing this as a full-time business, then you're willing to do the work.
Your personal cash flow, your presentation says to estimate disposable income.
Yep.
From the past 12 months, let's say the past 12 months.
Right.
Would be your gross income.
Yep.
Less taxes paid.
Right.
Right?
So how much did I actually put in my checking account?
Yeah. Okay.
And the following slide will show you, well, those are some of the things people have to pay to live. They got to pay their rent, they got to pay their car payment. Go ahead, pop that up.
Well, speaking of which, this is further information on personal cash flow, is those 12 months of living expenses that you're looking at would include what?
Those things right there.
Housing,
rent, car
food,
payments, food,
recreation,
transportation,
so to speak,
Sure.
Clothing, personal care.
And what did you spend on that last year?
Yeah.
You're more than likely going to spend that this year, and how you're going to cover that in stepping into this new business.
Well, it would also make you look at how necessary those expenses are.
Well, that's true. You might be able to cut some things out.
I mean, there may be,
Yeah.
maybe you're, a frugal person, maybe you're not, and maybe you're not watching your expenses.
Yeah, because you don't have to, maybe. It's
Now-
tightly. But now you're going to
are.
have to.
If you follow this,
Right.
the presentation.
If you're making 80 grand a year and only spending 30, well, that's a lot easier than, oh, am I going to make the 30 from this business next year because I know I got to pay the rent or the mortgage, and there's certain things you've got to pay. You might be able to cut out, eating out,
Right.
twice a week or whatever.
Right,
Yeah.
right. A personal financial statement would be, according to your presentation, would be assets and liabilities. Also verified by a credit check.
Oh, anytime you submit to a lender, they're going to check your credit, and they're going to do what they can to verify that what you put on, it's your personal financial statement. It's a balance sheet. It's personal. I own a home. I own this home, and the home is, valued at a particular day at $500,000.
Yeah.
So that's an asset.
Right.
But I also owe $300,000 on it in a mortgage, so that's a liability.
Right.
So I have $200,000 of equity in that house. And what you do with a personal financial statement is you list all of the things you own on one side.
That's OWN.
Right, and I'm not talking about Oprah's network, okay? And then on the other side, you list what you owe against those assets.
OWE.
And then the difference between those two is your equity or your net worth.
The credit check, by the way,
Yep.
is it possible that people watching this show don't know that you can check your own credit?
Check your own credit and do it for free
God,
without hurting your credit rating now.
When you and I were young puppies, that wasn't even possible.
No, right.
Not even in the realm of possibility.
Today it's easy.
Today it's like click on your smartphone or your
Yep.
tablet or your
And you're
PC.
You got your number.
Bingo.
Yep.
Credit Karma and other
All those, yeah.
locations and so
Right.
forth.
Very
Of
simple
course,
to
your
do.
bank, you have a banking relationship. You go in,
Yep.
they would tell you.
They'll know you. They're going to
They'll-
check your credit.
Yeah. So credit check.
Yep.
Always required for loans.
Yep.
Always included in a business plan.
Always. Yep.
Okay. Okay. So.
That's one of the 5 C's is what is your credit? What is your contribution to the business? What's the bank got for collateral? We've talked about those things in previous shows.
Right.
Yeah.
Okay. Assets.
Yep.
We got a list of assets that you should be looking at if you haven't already,
Yep.
which would be cash,
Yep.
savings.
Cash is a wonderful asset.
Savings would be like a savings account in
Yep.
particular. IRA or retirement account if
Yep.
there is, if you have such a thing. That's also savings. It's a type of savings.
Yep.
Accounts or notes receivable.
Yeah, if Uncle Festus owes you 10 grand, it could be an asset if he pays you back.
If you have life insurance, but
Whole life.
not term life.
Whole life. But that,
Say, I have a life
but nobody does
insurance
that.
policy of a term life.
Nobody has those things. I haven't seen one of those things in 20 years.
What?
whole life. So, yeah.
They're still selling that stuff.
Yeah, they still sell it. There are people out there
It's
buying
something
it.
called whole life insurance, which is a part insurance and part savings.
Exactly.
The way it's but the growth rate could be very modest.
Just, yeah. Moving on.
And life insurance, if it applies, or stocks and bonds, that would be investments.
Stocks and bonds are good, as collateral, because as of that day, you own 10,000 shares of Amazon at $200 a share. Great, you got $200,000 of assets.
That would be stocks and outside of an IRA. The IRA
That's
itself
right.
would be invested in
Right.
stocks and bonds.
Right.
We're not counting that. We're
Nope.
saying outside of that,
Right.
you actually own 10
Yeah.
shares of Apple or something,
Yes,
or whatever
exactly.
you do.
Exactly.
Okay.
One
Okay.
share of Warren Buffett's company.
You got one share.
$500,000 a share or something. I don't know what it is now.
And
Berkshire Hathaway.
Coach, we're continuing on assets.
Yep.
What you're looking at for assets.
Yeah.
Real estate.
Oh, sure. Real estate's a very good, solid asset. It's collateral, great collateralization to a lender that if you don't pay them, they're going to grab the real estate that you pledged.
If you rent only, doesn't count.
No,
'cause you have
don't
no
own
equity.
that.
You have no ownership.
The only thing you get at the end of the month when you rent an apartment is a rent receipt.
Automobiles, of course, that's market value only.
Yeah, current market value. Don't forget, a balance sheet is like a snapshot with your iPhone. I know
Yeah.
we used to talk about cameras. We don't have those anymore. It's a snapshot. It's not a video. It's as of a certain point in time. Could be December 31st, January 1st, could be any day. So it's as of that moment in time, this is what I own, this is what I owe, and the difference is, and that moment of time, that was my net worth.
Coach is talking about a snapshot because a balance sheet could be different the very next day and change.
Yep.
The next hour, the next day, the next month.
Yep.
So it's just showing as of a moment in time
Right.
what you look like, which is very useful.
Yeah.
But it is frozen for that one
That's
moment
right.
in time.
Right.
Any other personal property that you might have?
Right. You could own a strip mall, or you could own the Cape Cod Mall, or, what's the mall up there at Gillette Stadium? You could own that, like Mr. Kraft.
Rich Men's
Yeah, sure.
Mall or
Yeah.
something. I don't know. Okay, and now we're going to turn your attention to liability. Now look at liability.
Yeah, that's the other side of the equation.
The other side. So like accounts payable, what you
Yeah.
owe,
Yeah, right.
or notes, or so-called notes payable, accounts
Yeah,
payable.
you might owe a bank $10,000 on a loan you borrowed. Yeah, sure.
I think typically an account payable, I mean, typically that would refer to a vendor. You owe a vendor.
You owe somebody money.
A note payable might be a short-term
No.
or longer-term note that you
Yep.
sign.
Right.
Okay. And installment payments, that's a loan, for the auto.
Well, your auto or just your Visa card or MasterCard, I mean, that's an installment payment. So what you would do is say, gee, I have a MasterCard and a Visa card. I owe $5,000 on both as of this day.
Right.
So you'd put down that I have debt of $10,000. You
Right.
might be paying a couple $100 a month on it, but
Sure.
as of that day, I owe $5,000 on each of those cards, and
Right.
that's what you owe.
Right.
Liability.
And installment payments. Loan on life insurance, we're not going
Yeah,
to.
but again, nobody has that. Yeah,
That was back in the 50s.
that's gone. Yeah, forget that. They should take that off of that.
Real estate, a mortgage, is if you had an asset that you own.
Well, if you own a house, like I said
property,
earlier,
you
if you own a house it's worth $500,000, you put it on the asset side. On the liability side, you would put down, well, I owe $300,000, or whatever you owe,
Right.
and therefore you've got $200,000 of equity in that house. $500,000 is the asset, $300,000 is the liability, and $200,000 is yours. It's the equity, and so you'd put down what your mortgage
Right.
left on your house is, because on the left-hand side, you put the value of the house that day.
Then you have other unpaid taxes if you have a hidden.
Well, it's
little
okay
hidden pocket of debt.
Yeah,
there.
if you owe back taxes to the IRS, you're not going to get a loan from anybody. Unless you have a payment plan in place. So you've made your deal, you've done your due diligence, you've gone to the IRS and said, I owe you this much money, give me a payment plan over the next 3 years, And then you would put down, yes, I do owe the IRS 10 grand, but I do have a payment plan, and so that's put down as a liability.
Okay.
If you don't have the payment plan in place, don't even bother going to a lender until you get that squared away. They don't want to talk to you.
Okay. Now, we're going to get into your business affairs. Your next presentation, your next slide, Coach, is on something called proper pricing.
Yep.
And you call that, you boil it down and simply call it difference between success and failure.
And failure, that's all, because, like I've said so many times to people, and we stick this in here even though it has not a lot to do directly with financial statements, but we put this in there because in the morning we talk about product, price, place, promotion. In the afternoon, I want to stress that you don't want to start a business just because you're going to do it cheaper than anybody else. That's not the way to make money, sustain a business, is to charge less than anybody. Unless you have lower costs than Walmart, you can't compete with them, right? And by virtue of the fact that you are starting a small business, you're probably not going to have lower costs than everybody else, nor should you just think, I'll start my business and I'm just going to undersell everybody, right? That's not going to work. But by the same token, you can't charge more for what it is you're supplying unless there's a value there to the customer.
Right.
And then you can charge more, because people don't buy based just on price. They buy on what they perceive as the value of coming to you. So you've got, like we've spoken about so many times, a unique selling proposition, a competitive advantage. I'm doing this, none of my competitors do that.
Right.
And they're charging you $100. I'm going to charge you $110, but boy, you're getting so much more from me, and then you might have a shot at the business. So pricing is a critically important issue.
Yeah, so what you just said, underpricing can cause a business to fail.
Yeah.
Like you said earlier, the guy selling suits, you're losing money on every
I'll
sale.
make it up with volume,
But
right?
you say, well, I'm going to make it up in volume.
But you won't. You'll just go out of business faster.
But on the other hand, overpricing can also be a crime.
Well, if you're doing exactly the same thing as everybody else, so we live in a world of near perfect information thanks to the internet and technology. I can check prices very easily across the board. I mean, that's what Amazon does for you when you go to Amazon. They compare all the prices of all the different people trying to hawk their products through Amazon. Amazon's going to take their share no matter who you buy it from. That's the beauty of Mr. Bezos' business model. So if you charge too much for something, eventually the customer's going to say, well, I can get the same thing from somebody else for a lot less, then I'm not going to give you my work. Unless you're different, unless you're better, I'm not going to give you more money.
Coach, we're gonna cut this episode at this point.
Yep.
And because we're gonna do a follow-up episode because we've got more to talk about.
Yep.
On understanding financial statements.
Yep.
And thank you for this is the Fox Robbins Business Show. Thanks for watching. All of our episodes are uploaded to YouTube for convenience. And there's a library of Fox Robbins shows, all different subjects. Go to YouTube and in the search box just type in a single word, Fox Robbins, FOXROBBINS, and hit the search key, and voila, there's a library, and pick any topic that is of current interest and go from there. And we're going to do episode 2 of Understanding Financial Statements, so we'll see you next time.